Hi there viewers, welcome back to the Money Show. Now there are a plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through this maze, we have Abhijit Choksi, the founder at Stockify.in, joining us on the show. Viewers, before we start addressing your queries, do not forget to send us your portfolio queries on our WhatsApp number 865-797-4571. Also remember, you can email us your queries on themoneyshow@etnow.tv. But on that note then, let's start addressing all your viewer queries one at a time. And Abhijit, welcome to the show. Thank you so much for taking the time out and speaking to us at ET Now. The first query is coming in from our viewer Yash Guraf from Mumbai. He's 27 years old. His mutual fund portfolio consists of the following funds, along with his total SIP amount is 35,000. It's been 3 years since he started this SIP and his target is 2 crore rupees in 15 years. Now, some scheme in his portfolio includes the Parag Parikh Flexi Cap, PGIM India Mid Cap, UTI Nifty 50 and others. The portfolio is flashing on the screen. Could you review this portfolio and suggest if any changes are required?
Right. So there are mainly two parts of Yasha's question. So part one is whether the list of mutual funds are appropriate or not. So I would suggest him to trim down at least 2 or 3 funds. So out of 7 of his funds, he can trim down it to 4 by clubbing the similar looking funds. Like for example, UTI Nifty 50 or HDFC BSE Sensex or ICICI Nifty 50. These are all practically large cap funds likely to give a very similar trajectory of returns. So what he can do is that he can club these funds and trim down his portfolio to at least 4 or 5 funds max. And the second question was about his target, which is 2 crores in 15 years. So that is easily achievable, provided he is able to consistently do a 10% step up going forward.
Sounds good. Yash, I hope that answers your query. Next mutual fund query coming in from our viewer Harsh, who's writing to us from Thane in Mumbai. He wants his portfolio to be reviewed. His target is 3 crore rupees in 15 years. The current SIP amount is 10,000 rupees each in Parag Parikh Flexi Cap, Motilal Oswal Mid Cap and Tata Small Cap as well. The total amount is 30,000 rupees from the SIPs, and he wants to add a further 25,000 rupees to the SIPs. So could you suggest an active fund in which he can start this 25,000, or should he increase the existing SIP amount by this 25,000 rupees? Now that's the first part of his question. The second part is he also has lump sum investments across some schemes, making his total portfolio 12 lakh rupees. You have the portfolio with you and his lump sum schemes are also flashing on the screen. Could you suggest how he should change or perhaps add or remove some schemes from his SIPs, as well as what is your view on the lump sum schemes?
Yeah, right. So I would suggest him to add one large cap scheme, as that is missing from his SIP portfolio. So as he has mentioned that 25,000 is his spare capital which he wants to invest monthly. He can bifurcate that in 2 parts. One he can do is in his existing SIP of Parag Parikh Flexi Cap, he can add, let's say, 5 or 10,000 more, and the remaining amount of 15 or 20,000 he can buy like an HDFC large cap fund, so which will make his overall portfolio much balanced. As far as his lump sum investments are concerned, they seem fine, so there is no changes from my side on that one. And as far as his target is concerned, I believe it's very much achievable, assuming he's able to do 10% step up SIP consistently for the next 15 years. 3 crores is easily achievable. Thank you.
Okay, well, I hope that answers your query. But our next viewer is Rakesh, writing to us, and he's 40 years old and wants to start an SIP of 20,000 rupees in mutual funds with a 10% annual step up. He's written a list of his goals, and I'm going to read them to you. He wants to accumulate 5 crores in 20 years. How much should he invest and in which funds? Secondly, to accumulate 10 crore rupees in 20 years, how much would the investment need to be increased by? He's also asking if it is advisable to make new investments in quant mutual funds right now. Other than that, he's also investing 12,000 rupees per month in the General Provident Fund. Could you suggest an answer to both of his queries? What should his investment allocation be like? Some funds that look attractive to you. And second, what would the step up need to be like to be able to reach his goal in the prescribed time frame?
Right. So to answer his first query, Rakesh is planning to invest 20,000. So I would suggest him to invest this 20,000 and divide it into four parts. So we can divide them like 5,000 he can invest in HDFC large cap funds. Remaining 15,000 he can divide them into PPFS, Flexi Cap, SBI mid cap, and DSP small cap. So combining this 20,000, he can divide in these four uh, SIP funds. Now, his question was whether how much amount should he invest to reach the purpose of 5 crore in 20 years. So with this 20K SIP, he is able to achieve the target easily. We are assuming 10% step up in that. The interesting part here is that let's say if from 10% he is just increasing his SIP step up to just 15%, then he's also able to achieve the target of 10 crores. So this is the power of SIP step up, which we generally share with our clients. And his other question was whether it is advisable to invest in quant mutual fund. Yes, part of the portion he can invest in quant mutual fund. However, as I have described, the earlier four funds would make his portfolio well balanced enough. Thank you.
Okay, Abhijit, just want to follow up on that. He's asking, he's investing 12,000 rupees per month in the General Provident Fund. How good of an investment is this? And would you have any other avenue that you would rather recommend him to put this 12,000 rupees per month in?
The General Provident Fund would be giving him returns similar to bond or like government treasuries. He can continue that as this would be more like an FD kind of return or safe haven return. In case if he is willing to take more risks in the equities, he can shift that amount to the in the equal proportion in the four funds which I suggested him.
Okay, and Abhijit, before we let you go, just want to get a quick sense on what an ideal portfolio should look like, because given the market volatility that we're seeing right now, would you A, recommend direct equity over SIPs, or do you believe SIP is the way to go? And B, how many schemes do you think an ideal portfolio should have in order to not be underinvested, but on the other side also not be too overcluttered?
Yeah, right. So the ideal portfolio we suggest is at least 4 to 5 mutual funds. Anything beyond that would be considered over diversified, because most of the people have this bias that more number of schemes might lead to more number of returns. But in reality, as we saw in the portfolio of Yash also, he had taken multiple similar looking schemes like NSE, Nifty 50, BSE 30. So all these funds, they just have different names, but eventually they have similar kind of returns. So maximum 4 and 5, and beyond that, I would not recommend. And going forward, I believe SIP has always been a way to invest in the markets, which evens out the returns. So one should continue SIP because India's story is here to stay. I don't see any changes going forward as far as our fundamentals are based. Thank you.
Okay, and Abhijit, just last quick note before we let you go. What would a realistic expectation be from an ideal portfolio, just so that there is no disappointment once the investor has begun their investment journey? Especially given in light of the way the current market is moving, and we're seeing some buoyancy in the primary market, secondary market, DMAT data, SIP, all of that is looking very good. What kind of returns can someone expect over, let's say, a course of 1 year?
Yeah, I believe at least 13 to 15% kind of returns one can expect going forward, considering there have been a reasonable correction in the last few months. So one can expect that going forward, and at least I believe the horizon should be for 4 to 5 years and above when it comes to SIP investing. Anything below that horizon would be considered a bit risky when it comes to equities as well as mutual funds.
Okay, well, Abhijit, on that note, we'll let you go. Thank you so much for joining us and answering all our viewer queries so patiently. Once again, a Happy New Year to you, and thanks so much for joining us. Well, viewers, on that note, we'll wrap it up on this edition of The Money Show. Keep writing to us on our WhatsApp number as well as our email ID. Keep sending us your mutual fund queries, and we'll be deconstructing your portfolios with our expert on the show. Keep writing to us, but on that note, it's a goodbye from me and the team that put this